Good afternoon. I am proud to present another outstanding NBA webinar. By way of introduction, for those who may not know me, I'm Alfreda Robinson, the President and CEO of the National Bar Association, which was founded in 1925, has continued uninterrupted for 95 years, and is the oldest and largest association of predominantly African-American lawyers, judges, deans, professors, students, and other legal professionals. COVID-19 continues to be an unprecedented worldwide pandemic that has resulted in, sadly, 83,947 U.S. deaths, 1.5 million sick, 36.5 million unemployed, unemployment over 14%, and African Americans and the poor are disproportionately impacted adversely. Our legal practices and business practices have been impacted adversely as well. For that reason, we need all the best financial advice available. The NBA COVID webinar services has presented financial advice before related to loans under the two federal stimulus acts by Congress. We know another one is trying to make its way through. This presentation does so as well, but specifically on COVID-19 and taxes. The panel will discuss, among other things, business tax provisions in the CARES Act. We have an outstanding panel of experts, MBA lawyers, and certified public accountants. They are Ashley Wicks, a member of the law firm of Butler Snow LLP's Business Services and Financial Groups. She is the chair of the NBA Audit Standing Committee and has done an outstanding job for a number of years. Also on the panel is attorney Beverly L. Winstadt, who is the founder and managing member of the tax law firm, Law Office of Beverly Winstadt, specializing in tax resolution, estate planning, and sports and entertainment law. She is a recipient of the National Bar's 40 Under 40 lawyers, top lawyers in the country. And finally, but not least, we are pleased to have Joy Smith-Sistruck, the founder and principal of Premier Group Services and a certified public accountant. One final word before we begin, as I always do. I invite you to join the National Bar Association by visiting our website at www.nationalbar.org. And now to the panel. Ashley Wicks.
Good morning. I will load the presentation now. And thank you, President Robinson, for that, that nice introduction. Today's panel, we will be focusing on the Paycheck Protection Act, or Paycheck Protection Program, which was a part of the CARES Act that was passed on March 27, 2020. We want to make sure that you understand the process for applying for the loans, understand the next steps after receiving the funds, and what is needed for forgiveness. Generally about the Paycheck Protection Program. As I mentioned before, it was passed as part of the CARES Act, which was passed on March 27, 2020. And initially there was $350 million allocated to the PPP program. You all may have saw the news articles about what were some unintended recipients receiving some of the funds. I know there was a big article about Ruth Chris and Steak Shack. I think it was Steak Shack.
Shake Shack.
Shake Shack, yes.
And
And
that's
then,
billion. That's billion. You said million. I just want to make
I'm
sure everybody
sorry,
knows it was a lot of money out there.
$350 billion. And then the second round of funding, which was in response to that, because Congress felt that the small business owners did not receive enough of, or did not receive the funds that were intended for them, and that additional funds were needed because America is hurting at this time. So they allocated or authorized another $310 million on April 24th, 2020. And one of the Shake Shack and Ruth Chris examples, part of it was, this program is being administered by the Small Business Administration, and we're going to talk about the application process in detail, but it's been administered by the SBA. Usually, in the SBA programs, there's a process where you can certify that you don't have a certain amount of liquidity to borrow funds from other sources. And in their negotiations and trying to get this approved to meet the needs of small businesses, as a compromise, that requirement was eliminated. So as a byproduct of that, you have the SBA Treasury issuing all of these regulations or updates post the initial authorization of the acts. So we're going to talk a little bit in detail about some of those changes that have happened along the way. And we're going to talk a little bit about what you need to do to protect yourself and to advise your clients to protect themselves. So, Joy?
Actually, I think it's me. I think I'm up.
Okay, okay.
Yeah. So let me just start by saying thank everyone for joining. One of the reasons why we wanted to do this presentation as part of the tax section of the National Bar Association is because we felt like there was so much information coming at everybody that we all were feeling overwhelmed, and we practice in this area, right? And anytime as a practitioner we're feeling overwhelmed, we felt that the public, small business owners who really need the funding, may be throwing up their hands too and not really taking advantage of certain programs. So we wanted to take this time to really share with you know, our members and small business owners why, you know, this program may be a good fit for you, why it may not be a good fit for you, but at least we want to break down the program and the information and get it to you, right? So let's start with who qualifies. So under this program, people that qualify are businesses, nonprofits, small businesses that have $500 employees or less, and W-2 employees. Right. The terms of the loan is you can get max loans up to $10 million. 8 weeks of the loan amount can be due. The reason why we say can is because there's a good chance that if you use the funds the way they are specified that you can use them, the loan actually becomes forgivable, which in essence, we kind of say, hey, it's a grant, right? So the interest rates are 1% for small businesses. The repayment term is up to 2 years. You have 2 years to repay this, and you can defer your payment for up to 6 months. Now, let's go back to when I say what the funds must be used for. So the funds can be used for payroll costs, including payments for medical or sick leave, severance payments, healthcare benefits, retirement, state and local unemployment, state and local employment taxes, and rent and utilities. So one thing I want you to keep in your mind, and if you have a pen and a piece of paper, now will be a good time to write this down. 75% of your loan, once you receive it, must be used for payroll costs. The other 25% can be used for rent and utilities or mortgage interest. So that is the way you get the loan forgiven. Here's some questions you need to ponder while you're thinking about whether or not this program is right for you. you want to ask yourself, hey, do I have employees? Do I pay others? That's the first thing. Do I pay others? Do I have employees? Do I have contractors? If you don't have contractors or don't have employees, you still can qualify. So the question you want to ask yourself is, do I have net income from my sole proprietorship in 2019? So sole proprietorship can also be a single member LLC, because we know that single member LLCs are taxed as sole proprietors. And Ashley, can you mention a little bit, because I know the certification process has changed. The SBA issued FAQs, I want to say yesterday or maybe it was real late, maybe Wednesday night.
Late Wednesday night.
Late Wednesday night, about the certification process that is now no longer applicable to people that get loans for $2 million or less. Or Joy, it doesn't matter.
Oh, okay.
Okay, can you hear me?
Yes.
Okay, as part of the new regulations that were issued on, I think Joy said it was Wednesday on the 13th. If you look at question 46, and this is for all you lawyers, you know, you want documentation. So it's question 46 and the frequently asked questions. If your loan is for less than $2 million, the SBA will deem that you are you meet the qualifications for the loans. And part of the reason for that is based on their experience. If your loan is less than $2 million, you would not have access to capital like some of the larger loans. So if your loan amount is less than $2 million, you can rely on that particular frequently asked question, that you acted in good faith when you received the proceeds from the loan. Oh, and one more housekeeping tip. One more housekeeping thing that I was a bad moderator that I forgot to mention at the beginning. We want to make sure that this presentation is answering and meeting your needs. So feel free to post questions in the Q&A, and I'll monitor them and ask them as the presentation goes along. But we wanted to make sure that we are responsive to whatever questions you may have about the program as we go along with this presentation. Beverly?
So the application process.
Oh, it's Joy.
Yeah, no problem. Go ahead. The application process looks like this. For businesses with employees, the bank is going to be looking for you to provide your 940 for 2014, all 4 quarters for 20 of 941s for 2019. They're going to also be looking for you to provide your 2018, 17 and 2018 tax returns. They're going to want to see January through March 2020 bank statements, articles of organization, and they've also, depending on which bank it is, they also have the right to ask for other items that might support your loan application. For sole proprietors, independent contractors, and self-employed individuals, which includes partners, they're going to want to see a Schedule 1, a draft of your Schedule C, your 1099, or your K1, something that supports your self-employment earnings. Next slide, please.
Excuse me. Joe, one of the questions that we received, and this might be a question for Beverly, the question is, are certain nonprofits not eligible for the Paycheck Protection Loan?
It has to be a 501c3. I know that there were certain groups that were lobbying for them to modify it to include 501c6s, but right now it's specifically only for 501c3s.
And in those same regulations, it was noted that nonprofit hospitals that are exempt under, I think it's 115, they can also qualify, but they have to take some additional steps showing in their records that it was intended that they meet the qualifications to be a 501c3.
Right.
So that is one of the responses to the frequently asked questions, and there may be others in that the newly frequently asked questions But that was one of the ones that I did see.
The other thing is under, because we may have some agricultural members on here or agricultural lawyers, is that under the fourth stimulus bill that was passed, because like I said, there's been so much information that's come out. There's four major pieces of legislation that have been passed this year. The fourth stimulus bill that came out included farmers.
It did. Okay, next slide. So the way they're going to calculate your loan amount is they are going to take your monthly expenses for payroll, health and retirement, state taxes, rent, mortgage, utilities, and they're going to multiply that by 2.5% to come up with your loan amount. And in this case, it's $107,500. And as long as you use the percentages that Beverly stated earlier, as long as you use at least 75% for payroll and 25% for rent or utilities, the loan is forgivable. In addition, if you can't meet the 25% for rent and utilities, you can actually use 100% of it for payroll, because we've been asked that question quite a bit. So you can use 100% of it for payroll, and the loan at this point will still be forgivable. Next slide, please. So you got funded, which is great. What are the next steps that you need to take? We are suggesting that you put your PPP funds in either a separate account or a minimally used account, because you want to be audit ready. And we think that the banks have not yet issued the guidance for forgiveness, but there's a good chance that they're going to want to see documentation, including your bank statements, to have your loan forgiven. So it's in your best interest to have it in a separate account and not mix it in with your regular operating account, where it could be deemed that something used the funds inappropriately. And so you want to have a clean audit trail.
Joy, if I have so if I receive the PPP money and I go and I set up a separate account to put those funds in, my existing payroll account, do I transfer the money to my existing payroll account, exactly, or how?
You wouldn't. Yes, you would keep everything the same for how you normally would pay payroll, and you would just transfer the money from your new account to your existing payroll account, and transfer the exact amount of what we're going to call gross wages, and attach what we're suggesting is you then attach your payroll report to that, I guess that transfer amount, and save it somewhere on your computer or print it out and just have it ready and keep your audit trail, the audit ready. The next thing you have to do, because this is also going to be a part of the calculation, you have to determine how many employees you had at February 15th, because you're going to, as of June 30th, you're going to have to certify that you have either that same number of employees or have a good justification as to why you don't have that same number of employees. Because one of the things that these PPP funds were to be used for was to bring employees back and to keep people off of unemployment. So they want to make sure that you use the funds to help your employees and that you didn't just use it for regular business expenses.
So if let's say I had an employee that didn't want to return to work when I open back up, I can replace that employee to still meet my whatever number I said I had on February 15th.
Actually, you can. So you would do two things. You have to, one, they're saying if you can send that person an email or document in writing that you offered this person their job back and that they rejected it, you don't even have, they're going to give you an exception for that, or you can rehire that position. So you can do either, but as long as you have the documentation to show you extended the job back and the person rejected it, that's fine. And on the flip side, people need to be aware to start telling their employees, once you offer their job back, technically they're no longer eligible for unemployment, because one of the things you certify in unemployment is that you have not been offered a job and that you cannot work. So if you offer them their job back and they say, well, no, I'm making $900, $1,000 on unemployment, I don't want the job back, they have technically, and then next week they certify that they don't have a job, they've committed fraud. And that's going to be something that comes up quite frequently over the next year as this program, as they dig deep into the details of this program. People are going to be forced to pay their unemployment benefits back.
So Joy, If you are a single member LLC or sole proprietor
Mhm.
or a partner getting a K-1,
Yeah.
you don't have employees. So how would you pay yourself, you know, or use the funds?
You would write yourself a check and you can deposit that wherever into your personal bank account, but you would write yourself a check from the PPP funds to show that the money was spent on you as the only employee of the firm. And that should be all the documentation.
So you wouldn't just put that money, like we said before, you wouldn't just put that money in, Joe, we're getting a comment that you're a little bit muffled. Can you turn the volume up some?
Yes, and I'll move in closer too. Hopefully that helps.
Okay.
Yeah, I'd sent you a text saying that, but.
Far away.
I forgot my question that fast.
We were talking about the sole proprietor sending, transferring, writing herself a check or himself a check.
Okay, so the reality star that what was his name, Beverly?
He was on a Love and Hip Hop Atlanta person.
Okay, so if he what he should have done was, if he was saying that if he was a sole proprietor, what he should have done was deposit his PPP money in one account and wrote himself a separate check. I know he was saying that he had employees, but he should have, if he was just a sole proprietor, he should have just wrote himself a check and deposited it in another account.
Yes, because he took all the PPP money. First of all, he said he had 107 employees. He didn't have that many. So
back up, we're talking about fraud in the application process, because even though, one of the reasons why we're doing this program is because we want everybody to know that there are resources available. Hopefully you don't have to struggle during this period if you really need funding, but you have to be honest and truthful in the application process. Right. So if you're not honest and truthful, one thing I can say, even though you're deemed certified by getting a loan less than $2 million, that doesn't mean that you won't get audited, right?
Right.
It's just that when it comes to resources, the DOJ and the SBA are really going to focus the majority of their resources on people that have loans that are $2 million and above, but they're still going to look at people that have applied for lesser loans. Right. So there was a gentleman that came out in the paper yesterday. He was a Love and Hip Hop reality star. I can't recall his name, but he actually applied for a loan, a PPP loan, fraudulently. He claimed that he had 107 employees, which means he probably had to make up fake 941s and 940s, all the things you have to submit in the process. And he used the funds because the one thing you have to understand is that the bank is not responsible. It's on the borrower to submit accurate information. So once you submit your application, everything now really falls into your hands in terms of liability purposes. So he submitted this information. DOJ has charged him now with bank fraud. So you want to make sure that when you're applying, that you apply truthfully.
We have another we have a question in the chat and a raised hand. Beverly, the participant, her first name is Beverly. You have a raised hand. Can you post your question in the Q&A? Otherwise, it'll have to wait to the end. But we have another attendee who is asking, can you still apply for the PPP? If so, how? And it looks like banks have closed out the application process.
Joy, I'm gonna let you take this.
I was gonna say, actually, we actually have one of our bank partners on the line. Her name is Justine. They are actually still taking applications. I spoke to her this morning. They're taking applications even today. If you are in the Maryland, DC, Virginia area, their application is still available. If you are not, you need to talk to a community bank because there are still funds available, because they did this time around, they actually slotted, I think it was
$60 billion for small
business. So as a result, people aren't applying as much as they have been in the past. And so it's important that we use these funds, and we don't know, I know there's another bill on the table, but we don't know that that's going to get passed. So while there is still funding available, you still should and could apply.
Yeah, and let me just piggyback off of that, because we're not saying that you can't apply. Let's say you have a pre-existing relationship with Bank of America or Wells Fargo. You can actually apply with them, but we found in doing these applications for clients that the smaller banks have been much more
They've been faster.
quicker. They've been quicker in just getting the person approved, getting our clients funded. And, you know, when you're talking about a limited amount of funds and whether or not they're going to run out, you want to go with somebody who can get you in line, get you approved, and get you the money. And then that way you can move on with your life and move on to something else.
And Beverly and Joy, can y'all mention a little bit, because I'm monitoring the Q&A, about other entities other than banks that are also processing PPP funds, like Square.
So there's
Somebody
Square,
said fintech.
fintech, there's Cabbage, there is Long, there's a bunch of
PayPal.
PayPal, and
I think QuickBooks is even into it now.
Yeah, but QuickBooks is only doing it for certain people. But we actually on our website have a list of the resources that where you can apply for the loan. So if you go to our website, www.pgservicesinc.com, right on the front page, there's a link to all the resource page where you can download all of the providers where you can get a loan. And the reason, I guess, you can use any of those lenders. You can also talk to a community bank. To Beverly's point, we had people going to Bank of America and Wells Fargo, and they were taking 30 to 45 days to fund. We worked with a small bank with Justine and her company, and we were able to get people, we got put applications, and Beverly and I both did on Friday, and people got funded on Monday and Tuesday. So you can't really beat that turnaround time.
So at the end, right, at the end of this presentation, there's contact information for both Joy, I, and Ashley. So if you need a direct banker, if you want to go to someone that's, you know, I think that will handhold you through the process, then definitely email us and we'll get you the information to Justine or maybe Harbor Bank, or, you know, somewhere that's local that we feel that will really handhold you and help you get the funds quickly.
And this is a good opportunity for when you're counseling your clients about this, and even for yourself. It's imperative that you have banker relationships, which we're talking about going to some of the smaller banks, and there are other resources like Square and PayPal, as mentioned. But in your daily operations, you want to make sure that you have a banker that answers your questions, that's responsive, that you have a banking relationship, because they're making money, whether it's fees that they charge or whatever. You want to make sure that you are you have some type of banking relationship, and this is advice that's beyond the PPP long conversation, but you want to make sure that you have a banking relationship. We have another question. The question says, I have a home office I rent. Is my monthly rent for my resident countable toward the 25%?
And what we've been telling people is, as long as you have a lease agreement, yes, it is. If you do not, then that's going to be a little bit of a gray area that we're going to wait to, because we haven't received guidance on home offices yet. If you have a lease agreement, yes, or if you were reimbursing yourself through a reimbursable plan as the owner, you can deduct both of those as rent. But if you don't have either of those, then it's going to be a gray area, and we're going to err on the side of caution and say that they're not going to consider that as rent.
But that's as of, you had to have it in, you had to have had that in place as of February 15, 2020.
Yep.
You can't just draw up a lease now.
Right.
And thank you, Shannon, that's a good point too. That local Black banks, credit unions, and CDFIs are also good sources for getting these PPP loans.
Oh yeah, absolutely.
That's true. Mm-hmm.
One more question. Is the interest rate the same if you use an entity like Square and PayPal?
Yes, the 1% is set by the SBA, and so that doesn't change no matter who you use. So,
okay, Joy.
No problem. So we talked about the bank account, the employees, the financial statements. One of the things that you want to do is on your financial statements is create the PPP as a loan account, because until it's forgiven, this is actually a loan. Again, and also you need to create separate expense accounts for calling them COVID-19 salary, COVID-19 rent, and COVID-19 utility and health spending. Because as of right now, this money that you receive for PPP is not deductible for your tax return or for your taxes. So we need to segregate this out so that we can make sure that we don't double dip, because under audit, this is not going to stand up. They are saying that the COVID-19 PPP loan cannot then be deducted, as the expenses you incur cannot then be deducted on your tax return.
Okay. And as we said, that the regulations are constantly evolving. So even if you're under this $2 million threshold where the SBA is deeming you to have acted in good faith, you always want to make sure that you have a proper paper trail, and you're able to trace information and trace how you spent the funds and where you spent the funds. Because like we've said before, like Beverly and Joy have said before, that things are constantly changing. We have another question. If you are receiving primary income from your own business and you are receiving income from another employer, which is a part-time / seasonal job, such as, let's say you teach swim lessons. Mm-hmm. Do you qualify to continue receiving employment benefits if the part-time employer reopens?
I'm trying to make sure I understand the question.
I would say we probably need to get specific facts of your situation. Right. I don't necessarily feel comfortable answering because, it has to do with probably how much money you're making in your business, right? That's one thing you have to look at. And then what else is going on with the part-time employer. So it probably would be best if you contact either Joy or I or Ashley offline to answer that question.
Okay. And like Beverly said, our contact information is at the end of the presentation, so feel free to email.
Okay. Next slide.
All right.
So what is needed for forgiveness? You're going to need to, if you run payroll, you're going to need to have your payroll records for the next 8 weeks following the funding of the PPP loan, because technically the date you're funded, from the date you're funded, you have 8 weeks to spend the PPP loan money in order for it to be forgiven. Again, you need to have evidence that you maintain the same number of employees or rehired the employees by June 30th. They're going to want to see canceled checks. They're going to want to see documentation for your health insurance, your retirement, and there is going to be a formal request process for the forgiveness portion. We just have not, most lenders have not issued that yet because they're still just trying to get the loans out. And the forgiveness portion is going to most likely begin on July 1st. So we're recommending that as soon as the forgiveness comes out that you get in line, because the lender has up to 60 days to process your forgiveness request. And just if getting the loans was any indication, the forgiveness is going to be even, I'm going to say worse, because there's going to be everyone's going to want forgiveness. So you're going to have this vacuum of people, everyone's going to be submitting their information at the same time. So as soon as it opens, you want to be one of the first people online asking for forgiveness, because we're not sure how long it's going to take for it to actually be forgiven.
And Joy, the paper trail that we talked about creating before, does that help with the forgiveness portion?
It will, because then you're ahead of everyone else, because you already have all your documentation, and no matter what they ask for, you already have gathered it all and are just ready to submit. All you need is their formal, whatever their application process is, whether it's going to be to upload or to mail. You already have your ducks in a row.
Okay. We have another question. If a loan is forgiven, are you taxed on the money you receive?
No.
Do you have forgiveness of debt income?
No. So you are not taxed on it, but you also cannot deduct it. So in a way, so your income is your net income is automatically going to be higher, because you lose the ability to deduct any of these expenses.
And we did receive a comment that some payroll processors are creating PPP loan forgiveness reports.
Yes.
And PPP online calculators.
Yes.
Which is kind of the record keeping that we discussed in the earlier slide about the documentation and creating the separate accounts. What about a new business that was formed in 2018, 2019 that has not yet filed taxes? Can it meet the requirements to qualify?
It can, but what they're going to ask for is they're going to want you to do a draft of your 2018 return and your 2019 return at the same time, because they need to see proof of what the business made. And we haven't talked about this yet, but what was going to happen is you don't want to just for 2019 overinflate the numbers, because we have a feeling that at some point this information is going to be cross-referenced with the IRS to ensure that it was correct.
Absolutely. And not only that, if you are just, let's say you did start the business, you want to make sure you have your articles of organization, articles of incorporation, because that's one of the things that they're going to look for. For a sole proprietor, if you didn't actually register your business, if you've been operating, I can envision one of the ways that you might be able to prove that you actually had a legitimate business would be, like Joy said, doing your tax return, but also hopefully you have a separate bank account, right? Because that would prove that even though you didn't register as an LLC or a C Corp or S Corp, that you had this business set up back in 2018, 2019.
So again, the path to forgiveness, if you want the loan to be forgiven, you have to use at least 75% of the funds on payroll, health insurance, and retirement, and 25% can be used for rent or utilities. However, you can use more, or you can use up to 100% if you want to, for payroll, health, and retirement, if you want the whole loan to be forgiven. But in that same vein, what expenses are excluded? Salaries over $100,000. So if you pay yourself over $100,000, you can continue to do so, but only salaries up to $100,000 can be counted towards the PPP funds. You cannot use it for payroll outside of the US. You cannot pay federal taxes. So your FICA, you can't pay FICA with PPP funds. You also cannot take the new FFCRA credits that were issued under the CARES Act. So you either take the PPP or these credits for Social Security and Medicare, but you can't do both. You cannot pay your mortgage principal. You can pay the interest, but you cannot pay mortgage principal with PPP funds. And you cannot pay your 1099 contractors with PPP funds, because each of them was eligible for a PPP loan themselves. So it would be a double dip. So all of those things are things that you cannot pay with PPP funds.
And one of the issues that I think the frequently asked questions clarified, when you're looking at that 100,000, that's cash, not necessarily benefits. It's right. Cash paid.
It's just cash, right? It's just specifically salary. Thank you for the clarification.
And we have a question. This is a Beverly question or a Kyle question. How can I get a copy of today's PowerPoint presentation?
From what I understand, if Kyle is going to answer, but they are recording this presentation, and they are, I don't know, I think they're going to put it on the website and disseminate it.
That's correct. Yes, we're recording it, and it'll be on the website for consumption.
Okay, thank you.
Mm-hmm.
Joy, I do have a quick question though before this. Can you go back to the last slide, Ashley? Can you imagine a situation where the credits might be better to look at versus the PPP loan?
I think if you're over a certain dollar amount, I think not for small businesses, and I think people that got under $2 million, the credits to me there's no way they could be better. But if you're in the 2 million and above mark, and you had extra money and you can't make the good faith certification, then the credits may have been better for you.
Okay.
Next slide, please.
Yeah. So we kind of have hinted around this throughout the presentation, that once you get this PPP loan, and it's forgiven,
Mm-hmm.
then one thing you have to realize is that you will not be able to deduct payroll or your rent expenses, whatever you use these funds for. The IRS issued guidance saying that this is considered exempt income and for you to be able to deduct the expenses that you use the funds to pay with, you're basically double dipping. You're getting a double tax benefit. Now, that's the guidance that they issued. I do know organizations like the AICPA, and it'll be interesting if the American Bar Association also will continue to challenge this, because basically what those organizations are saying is that, hey, this is unfair. You basically are giving us this money and we need the money, and now you're saying that we can't deduct the expenses. So what the consequence of that is that, hey, you're going to have a higher tax bill. So imagine someone who got $100,000, imagine someone who got $200,000 or $300,000 or even $50,000 for some of you guys. It could be $25,000 for some of you guys. One of the things I would encourage you, as a tax attorney, and Ashley's the same thing, and Joy's a CPA, is that we're encouraging you, once you get the funding, you probably want to seek out an advisor that can help you do some tax planning. What we do as tax planners is, hey, we want to make sure at the end of December 31st, 2020, that we've applied all the tax strategies that will prevent you from having a massive tax bill in April of 2021 when you file that tax return.
Well, we're going to close out with, I think we've covered all of our learning objectives. But before we go over that, Joy or Beverly, is there anything else that you think that we need to point out before we conclude?
I would just say to do your best to have a clean audit trail. Make sure that you're going to be audit ready. Don't be scared to use the funds or apply for the funds. Just make sure that while you're using the funds, that you are preparing for what may come down the pipe. It's just like any other audit. Most of you are attorneys. If you're prepared for it and you understand it, it is much easier to deal with than if you're trying to scramble and get your documentation together once they show up at your door. So that I would just say, be ready.
Okay, we have another question. It says, I think it's a question. Schedule C for 2019 or draft of Schedule C. Bank requires applications. See the 2 attachments. 2 last years of returns. If the LLC or corporation need.
That's from Justine.
That's just from Justine. She's just like I said, she's one of the bankers that we have
okay, I'm
one-on-one
sorry.
relationship. So banks are different, banks have different requirements, but what Justine is just putting in there is basically First National Bank, their process when it comes to getting the application, in with them and then approved.
Okay. So, and she put the link to their bank in if you want to start the PPP process with them and her contact.
So I just have let's see. Okay. Joy, can you envision a reason why, or Ashley, someone may not be interested in applying for the program? So I'm talking about small businesses, probably most of the businesses that we kind of deal with on a day-to-day basis.
The only reason I could see you not wanting to apply is if you're not sure you're going to continue in business. That would be a reason to me to say, you know what, I'm not sure, or you're thinking about pivoting to something else and you just don't know what direction. If you're uncertain about your business's ability to continue, then I could see you not applying for the PPP. Other than that, I don't really think there could be a reason, because even if worst case scenario, they forgive nothing, you still got this loan at 1% for 2 years to pay back. And with the current climate, it gives you a cushion to do other things for the business. So we've focused a lot on forgiveness, but let's not forget, it is still a loan. So if you don't want to use it for the things that they've suggested, you can still use it and still get a 1% loan, which is unheard of, and have 2 years to pay it back. And so I feel like a bird in the hand is better than nothing at all, especially as we go forward. And we are very uncertain. We're opening back up, but we don't know for how long or what that's going to look like. There may be a second wave. There's all this uncertainty. So because there's so much uncertainty, I feel like you should have something in your back pocket to be able to help your business to thrive as we continue.
And
So Joy,
I
you got to
agree.
move closer to when you talk.
Okay. I agree wholeheartedly with Joy. And the other thing I would say, no, we're talking about documenting, just in case there's an audit, an audit in the application process, or audit in the at the forgiveness stage. Because the safe harbor is just it's that you acted in good faith when you're applying. And then the next step is on the back end, what's, when they're looking and reviewing, do you qualify for the forgiveness portion? So I don't see a reason why you shouldn't apply. I would say document everything. And another good practice that you can use, I serve on the board of a nonprofit, and one of the things that I told them to do is we documented in our minutes when we made the decision to apply or to accept when we made the decision to accept the funds, what the issues that we thought we were facing. We were uncertain as to our donors. We were uncertain as to all of these things. We were rely on these things for our income, or our income primarily comes from this source, and we've already been affected, and this is how. So so it's in the best interest of our organization to not only apply for these funds, but to accept and use these funds so that we're able to maintain our staff. And so I think that also, if you do it on the front end and document how that your thought process, that can go towards towards protecting you. And also, I would, if you're a sole proprietor and you're doing this, I would also just email it to myself after I went through, did a resolution or a consent of a sole member, and email it to myself, so I have documentation that this wasn't something I created on the back end. You said by the date of this email, this was the thought process and what my mindset was when I applied for, so there was no intent to defraud anybody.
Yeah. So I agree. I think prior to you having to act in good faith, now with the deemed certification process, for most of the businesses that we deal with, I think it's really a no-brainer to apply for the PPP. I know a lot of people, I'll say that some people, and even me in the beginning, I was kind of confused because there were so many different programs. And I think the last time we did a webinar, we had a participant that was confused behind the EDIL, which is the Economic Disaster Injury Loan, confused with that with the PPP program. So today we're just strictly talking about the PPP program. There was another program called the EDIL Loan and Grant that was available. You apply there straight through the SBA. The PPP, you apply with the bank. So there is a difference. We think the PPP is a much better program, and it makes better sense for small businesses to apply if you qualify than the EDIL.
And there was a question in the chat that says, will you post or describe the types of services available to assist, such as you all? Do you all know if there's a listing in anywhere? If you review some of the Q&A in the chat, there have been links posted to other sources, other providers. Justina shared her contact information, but Beverly or Joy, do you know of any website that has that kind of information?
Joy, we can't hear you. I think you have it on mute.
I do. Perfect.
Okay.
Can you hear me?
So are you talking about resources in general? Because I think on Joy's page as well as my page, our website, and we're going to give you this information at the end, that we both have COVID-19 portals, which are full of resources that, are free, that you can look at and figure out, I guess your next steps.
Right. Because not only do we have the PPP, but there are each of the counties had, Anne Arundel County is coming up with their own program. Baltimore City has a program. Prince George's County and Montgomery County, each county had their own program, and even different states and local governments have programs depending on where you are to assist businesses. So this PPP is just one thing, but there are a lot. programs that are available for people.
Right. And that's why I said it was so overwhelming, because you had all this information coming out at one time that, you know, you could really get lost trying to untangle what is most applicable to you. So that's why we wanted to slow down and make sure our members here at the National Bar, or, you know, even if you're outside of the National Bar, but really small business owners understood, you know, the aspects of PPP.
And Beverly, if a business received the EDL bonds, are they also required to do the PPP, or can you do both?
You're not required, but you can do both. I know there's a calculation, and since we have the CPA Joy extraordinaire, I know she knows this calculation just like that.
So if they got the EIDL advance, that does not impact their PPP loan. If they got an EIDL loan, they have to factor that into their PPP. But most people I know have not gotten the EIDL loan, so I would be surprised if that person got it.
Okay. And Jared Grant, I see that you have your hand raised. Can we allow him to talk? Let's see.
Yes, I'll make his. I'll make it so he can speak.
Okay.
Can you hear me?
Uh-huh.
Hi, everyone. I was just looking at, and I know we talked about the loan certification, and maybe I might have missed this, but the SBA, they had published the frequently asked questions number 46, May the 13th, that basically provided that any borrower that received PPP loans with the principal amount of less than $2 million will be deemed to have made the required, certification, good faith certification in good faith. So,
Jared, we mentioned that at the beginning of the presentation, okay, about the certification under $2 million, but a lot of the tracing information, we think is important on the back end too for the forgiveness portion. So okay, that's why we also included that. So you have a good faith that you applied. You have a good faith certification. They're deeming that you acted in good faith when you applied, but we're talking also about the certification process.
Okay.
And to mention, just because they deemed you to have done it in good faith does not mean that you won't be audited just because you're under $2 million. So
right,
that changed.
Right. Yeah.
Okay. All right. Thank you.
Okay. Are there any other questions? Okay, I'm gonna share, let's see. Here is the contact information that we mentioned before. And as Kyle said, we'll make this, this information will be available through the National Bar Association. And we have another slide for questions, but I think we've addressed all the questions that we've received. We have one more in the Q&A. Let's see, can I get to it? Let's see.
Let me see if I can pull it up. Oh, it just says great job.
Oh, thank you.
Well, thank you.
We just have a few closing. I'm sorry. Go ahead.
I was going to say, if you have additional questions, please feel free to email us.
Okay. I was going to say, President Robinson was going to make a few closing remarks if there are no more questions, which it looks like there might be. Let's see. Oh, no, sorry.
No, everyone is just saying we did a great job. Thank you. Thank you guys for attending and listening.
I want to thank the panelists for a tremendous presentation. It clarified a lot. You were all saying the same things, that when the legislation came out, it was overwhelming, and the best and most sophisticated business folks could not figure it out, and their lawyers. So you have really broken it down, and we hope that as the days come along and we're seeing more legislation and more proposals and more discussion, that we can have you back for a part 2. But thank you so much, and I thank everyone for participating.
Yes, thank you.
Thank you.
Have
for
a
the
good
opportunity.
afternoon.
All right, thanks.
All right.